Joining him right now is Nuveen Asset Management Chief Equity Strategist, Senior Portfolio Manager Bob Dahl. Bob, it is good to see you this morning. Characterize where we are right here as we enter this very busy next couple of weeks for third quarter earnings.
Our earnings are absolutely key, Maria, to get us back on track. We've had a setback in the market. It's like when a runner pulls a muscle. He doesn't get back on the track and act like nothing's happened. It takes some time to repair, not unlike the January smack. Remember, we revisited the lows in mid-February. This is going to take some time, but the underlying fundamentals, i.e. earnings, are still very strong. So we'll see higher highs. It just may take a little while.
When you say it's going to take some time, I think there's some folks out there who are looking at the markets and saying, I'm wondering if this is going to have an impact on how voters are feeling about the economy as a whole. Are they going to stay as optimistic? Do you think it's going to stay volatile through, the next 3 weeks and beyond?
I think it's likely it will. Volatile, of course, doesn't mean down. It means just kind of trying to find a home, going sidewise, some nice rallies like Friday, and then we'll see if we can hold these things. Look, the earnings will be paramount here, and I think the population will be watching the earnings more so than the market, because the good earnings will mean, as it's had in prior quarters, that stocks can be just fine, thank you.
Bob, it's Dagan McDowell. In recent history, when the yield on the 10-year Treasury got to about where it is right now, it was a great buying opportunity, not just to collect that interest payment, but really because you get capital appreciation because people have jumped in and bought these securities, and you've gotten capital appreciation. And so what do you say about the 10-year right now?
Interest rates are still low at 3% on the 10-year. As long as the economy is as strong as it is and inflation continues to move from very low to low, that puts upward pressure on interest rates. I think there's more to come. If rates stay calm as they seem to be at the moment, stocks can resume their uptrend. Remember, the hit to the market was in the wake of interest rates moving up too fast, 40 basis points in the space of a couple of weeks. Markets can handle higher rates, but not at that pace.